All right, let's jump right in. It's probably one of the biggest questions in investing, and maybe you're asking it yourself right now. Should I invest in gold or should I invest in stocks? It's the classic choice, right? The engine of corporate growth versus the timeless security of a precious metal. In this explainer, we're going to break it all down. You see, at the heart of this whole debate is a dilemma every single investor has to face. On one hand, you absolutely want your money to grow. You need it to build for your future. But on the other hand, you've got to protect what you've earned from things like inflation, crazy market swings, and just global uncertainty. It's this constant tug of war between going for growth and playing it safe. And here they are, our two contenders. On the left, you've got the stock market, that world of ownership in the companies that really drive our economy. And on the right, you've got gold, that physical, tangible thing that's been a store of value for, well, millennia. These are two totally different philosophies, two very different paths to wealth. So which one's the right one for you?
Okay, let's kick things off with stocks. For a lot of people, this is the main engine you use to create real, long-term wealth.
So, what is a stock, really? Well, it's actually pretty simple. When you buy a stock, you're not just getting a little piece of paper or a blip on a screen. You are literally buying a small piece of a company. You become a part owner, and that means your success is tied directly to the success of that business.
So why do it? Why pick stocks? Well, at its core, when you buy stocks, you're betting on growth. You're betting on innovation, on companies getting bigger and better, on the whole economy expanding. As these companies make more money, your share gets more valuable. And hey, a lot of them will even share their profits with you directly as dividends. It's truly an investment in optimism.
All right, now let's switch gears and look at our second path. This is a totally different way of thinking about value. Let's talk about gold, which acts less like an engine and, well, more like a financial shield.
You see, unlike a stock, gold doesn't have a CEO, it doesn't release quarterly earnings reports, its value comes from something way more ancient and fundamental. It's valued because it's rare, because for thousands of years we've all agreed it has value, and because it acts as that universal safe haven when other parts of the financial system start to look a little shaky.
And this is why gold plays a completely different role in a portfolio. It's almost like financial insurance. When inflation is high and your cash is losing value, or when things get tense in the world and the stock market gets spooked, gold often holds steady, or even goes up. It doesn't depend on any one country's economy, and it often zigs when the stock market zags. And you know, getting into gold today is way easier than it used to be. You can go the old school route and buy physical gold, actual bars or coins that you can hold in your hand. That gives you direct ownership, with no one standing in between. Or for sheer convenience, you can buy a gold ETF. It trades on the stock market just like any other stock and tracks the price of gold, but without you having to worry about storing it somewhere safe.
Okay, so we know their roles, but let's get to the big question. What about the results? How have they actually performed? Well, as you're about to see, it really depends on the time frame you're looking at.
So if we look at the recent past, say the last decade from 2015 to 2025, well, that's been a period of pretty solid economic growth and a really strong bull market for stocks. And the numbers really tell the story. In that decade, the S&P 500 gave investors a huge 175% return. Now, gold did pretty well too. It doubled. 100% return is nothing to sneeze at. But it was clearly outpaced by the stock market's growth engine during that time.
But what happens when we include a major crisis in that timeline? If we zoom out and look at a 20-year period, one that includes the massive 2008 financial crisis and the recent surge in inflation, the story completely flips.
And just look at this. Over those 20 years, gold actually delivered a higher return. It climbed an incredible 433%, while the S&P 500 came in at 358%. It's a really powerful reminder of gold's role as a protector during those really tough economic times. It did so well during the downturns that it actually pushed it ahead over the long haul.
This quote from Ultima Markets just nails it. Gold performs better during inflation, while stocks thrive in expanding economies. It's not about one being better than the other, period. They're just different tools for different economic seasons.
So, if it's not an either-or choice, how should you think about them? Well, the smartest investors don't just pick a side. They build a strategy that uses both.
And the key takeaway here is pretty simple. You don't want one asset to completely dominate your portfolio. You want them to work together. The whole point is to smooth out the ride by owning things that do well in different situations. That, right there, is the power of diversification. And here's what that might look like in the real world.
A lot of financial advisors suggest putting a small part of your portfolio, maybe somewhere between 5 and 15%, into gold. See, it's not there to be the main driver of growth. That's the stock's job. It's there as a strategic slice to add stability and protect against risk in the rest of your portfolio.
Now, for those who kind of want to get gold exposure but through the stock market, there's another way to do it. Gold mining stocks. As this table shows, it's a different beast. You're owning shares in a company, not the metal itself. This means you get a lot more volatility, but you also have the chance to earn dividends, something a bar of gold is never going to give you. It's kind of like a leveraged bet on the price of gold.
So, when you get right down to it, the debate isn't really gold versus stocks. It's about understanding the unique job that each one has in both building and protecting your wealth. Stocks for growth, gold for safety. But that leaves us with one final big question to think about. In a future that's being totally reshaped by things like digital currencies and AI, will the financial shields of the past still be the safe havens of tomorrow? Something to chew on.